Bitcoin and Ethereum, everyone has their favorites, but if you are a trader, you're not here for popularity. You are looking for clean setups, predictable behavior, and consistent edges in the market. As traders, we've all heard about capital allocation. Most people think this is solely how much money you put into each and every trading account. I'll take it one step further. I allocate my capital not just by account, but also by asset. And today I'm going to show you exactly how I do that, how I allocate my capital between Ethereum and BTC. I will cover the BTC dominance chart. I will have a look at the high time frame, low time frame, and compare everything so you know exactly which one to focus on and which one offers the better trading opportunities. I want to first have a look at BTC. What we can see here is that BTC likes to move in clean trends, especially on the higher time frames. And for this, let's have a look at the daily time frame on BTC and go back till August 24. You can do that in your free time and backtest that for historic price action. But what we can see down here, if we are aware of market structure, is that we had a super clean market structure change down here, with this being our low, this being our higher high, this being our higher low, and then the high was broken again. From that moment in time, we can say that this was a valid uptrend, a confirmed market structure change to the upside, and we are in a bullish environment. So let's follow the market structure here. We can see high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, and so on and so forth. So we can see a super clean trend on BTC, simply moving to the upside. As traders, we know the saying that the trend is your friend. I would say on BTC, the trend is your best friend. Then we can see market structure shifted again. We had the high, lower low, lower high, lower low, lower high, and so on and so forth. So a clean market structure change to the downside. Then we can see again, currently we are in a high time frame uptrend on BTC. Low, higher high, higher low, higher high, higher low, and so on and so forth. So market structure on BTC should be a key indicator when it comes to trading BTC. Besides that, what we know from trading BTC for a long time is that it respects high time frame levels perfectly. So if you're following along on this channel, you know by looking at the high time frame levels, the monthlies, the weeklies, and the dailies, we are able to achieve amazing results on BTC. That's why these levels can't be missing on everyone's chart. So it's already very important to note down and keep in mind that BTC is following trends, BTC is following high time frame levels, and BTC is also respecting previous support and resistance levels and likes to do those SR flips. So I'm going to show you another example of this. One pretty nice example was down here, for example, and this area of the chart as well. So here we had a super clean previous resistance that was flipped into support for another large move to the upside. It is doing the same for flipping support into resistance. We can see this up here. We had support, 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 support. That was lost, retested, and flipped into resistance. So that is already three things we always have to check when it comes to trading BTC. Market structure, high time frame level, support and resistance flips. Now let's have a look at how Ethereum moves just a little bit different. What you can see is that sometimes it's stuck in a range for days, sometimes even weeks. Then it is doing a breakout, and more often than not, a very violent breakout with a lot of follow through. So let's have a look at this right here. We can see Ethereum was stuck in a small range for 20 days. Then we got a large expansion to the downside. From the current support that we had at 1,400, we can see price doing exactly the same again. It was stuck for 14 days. Then we got a clean break with follow through. Price was stuck again for 14 days. Then we had a clean break. Then price was stuck for up to 60 days. And then we got this massive break to the upside. Following this video, or later in that video, I will explain why this is super important when it comes to swing trading Ethereum, knowing the characteristic that it sometimes is just stuck in a consolidation range and then does the breakout. So make sure to keep that in mind. So the problem here with Ethereum is that sometimes if you're not watching how this range is going to break, you can simply miss a trade and then it tends to be gone. It's not going to give you the retracement to get back into that trade. What that means is sometimes it doesn't just make sense to only place alerts on Ethereum, and instead it has to be checked regularly so you see early on if a potential breakout is going to happen or not. To summarize this right here, I want to have a look at a chart where we have Ethereum on the left and BTC on the right. Bitcoin, in my opinion, simply offers you more trading opportunities, especially when it comes to day trading opportunities and also scalp trading opportunities. So what we can do here is go to the 5-minute time frame on BTC and also go to the 5-minute time frame on Ethereum, because now we're looking at setups for the lower time frames. One thing that we obviously like to trade are liquidity grabs. Liquidity grabs are areas where we can fill bigger position sizes and tend to get super clean reactions on BTC, also on Ethereum, but on Ethereum, I'm going to show you that it doesn't happen that often on the lower time frames. So for this, we need to check BTC first. We can see this current low time frame high. We can see there was a 5-minute SFP followed by a swift rejection. Was a beautiful trade for scalp traders. This is a trade to take. This is a trade that can have a massive reward. Then we can see the current low on BTC is exactly the same setup. So we had a liquidity grab or SFP down here as well. This gave a beautiful reaction to the upside, and for scalp traders, this is a perfect trade to take. We can compare the same to Ethereum. The high on Ethereum was not as clean as it was on BTC. We had a minor liquidity grab up here, but the candle structure just didn't look that convincing. Then we can follow price and look at this current low. Once again, as opposed to the BTC chart, there was no SFP on the 5-minute time frame, because remember, a liquidity grab is characterized by this candle closing above the previous low. Here we can see the candle close below, and thus it does not count as a liquidity grab or SFP. It was not a swing failure pattern. Then we can see price was just moving to the upside again, giving no clean retracement, so this trade is simply missed, while BTC offered the perfect trade again. So what we can summarize here is that Ethereum offers less opportunities, but when it moves hard. So this can be frustrating for day trades, as it's sometimes super difficult to get into those day trading long or short trades on Ethereum, but on swing trades, once a trade is taken, it can run for a very long time. One thing to keep in mind here is that what I already said previously, that it just takes off without a significant retracement, that makes it super difficult for Ethereum to compound a position. Here we can see I, for example, gave a long trade on Ethereum at the lows. I was constantly waiting to compound my position. A good thing to look at is always the CC. What we can see, however, on no pullback we ever reached the CC. And when it comes to compounding my trades, I always have to keep price location in mind. The first typical good area to compound a trade is the CC Fibonacci, but if that is never reached, it is difficult to compound a trade. We can also look at the current break that we have on Ethereum. Again, super difficult to compound this trade. Till today, we have not seen a single pullback where it would have been possible to compound a trade. Instead, Ethereum likes to just squeeze to the upside. If we compare the same with BTC, especially on the lower time frames or our massive trades that we had, we can see BTC likes to test the CC, which makes it super easy for us to compound these trades hold the trades for a little bit longer. And this is exactly where time and asset allocation comes in, because what you don't want to be doing is just sit in front of the chart of Ethereum, do your analysis every day, spend a lot of time, and then simply find 0 intraday setups on Ethereum while BTC is offering 5 setups at the same time. That for me means that when I'm looking for day trades or scalp trades in the crypto market, I am preferring to trade BTC over Ethereum. When it comes to swing trades, I trade them equally. One thing I also want to do in this video is something that I don't do very often, and that is look at the ETH against BTC chart. People always say, why are you trading altcoins if you're not looking at the BTC pair? What I can say to you is, I don't need the BTC pair. I can trade altcoins solely based off the USD or USDT chart, and you can see for yourself that I have a proven system and it is simply not needed. But at this moment in time, since I can see it flying around all over X and everything, everyone is talking about ETH, BTC, everyone is talking about the Bitcoin dominance, I'm going to have a look at this for you and give my perspective on this chart. I'm not really looking at this to give a setup on Ethereum against BTC or trade this chart. I'm rather using this for context building. And for everyone's understanding, if ETH against BTC is rising, that means Ethereum is outperforming BTC. If Ethereum against BTC is falling, that means BTC is outperforming Ethereum. So what we have to do here on the higher time frames is look at the most important thing whenever it comes to reading a chart, and that is market structure. So what we can see, even if we start in September 2022, we had a super clean downtrend. That means Bitcoin was always outperforming Ethereum. Let's follow this market structure for a second. We had this high, low, lower high, lower low, lower high, lower low, and so on and so forth. So till April 2025, we had the most clean downtrend ever on this Ethereum against BTC chart. But it goes without saying that this has now come to an end. We can see since April 25, Ethereum is actually outperforming BTC. Okay, so we can see this here. Price made a clean low. We made the high, higher low. This previous high is broken. So at this point, we can call this a confirmed market structure change and say Ethereum is now outperforming BTC. So we have a clean market structure shift to the upside. Now, does that mean that I'm trading based off this chart and I'm now longing Ethereum because I can see we've done the first market structure change in a long time? Absolutely not. I would never trade this chart without looking at the ETH against USD or USDT. Okay. I can, however, keep this in mind and prepare myself for if we see a pullback on Ethereum, that we might have additional confluence looking at this chart right here. So one area I'm interested in for a pullback on this ETH against BTC chart is this area right here. Okay, so I'm actually going to place an alert for this and see what happens if we retrace into that level. And also what is happening with the ETH against USDT pair at the same time. If we are hitting crucial support, this can increase the probabilities of that trade playing out. So this is super interesting and important to keep an eye on these days. Even myself, I'm going to integrate that, or I have added that to my watch list, and I will check it regularly from now into the future. Now that we covered Ethereum against BTC and the market structure change we have seen, I also want to have a look at the Bitcoin dominance chart. This is also something I can see all over X at the moment. Everyone is talking about BTC dominance dropping. Is there an Altseason? Left, right, and center, people talking about Altseason. Does it even make sense for us as a trader? I would say no. For me as a trader, I'm trading whatever offers opportunities. I'm not trading seasons. If there's a setup, I'm taking a trade. If there's no setup, I'm not taking a trade. There can be alt season, whatever season. That has zero impact on my decision making. But anyway, let's have a look at the BTC dominance. What we can see here, the chart looks a little bit different. I want to hide this for now. The chart looks a little bit different in a way of that on this scale, we no longer have a price and instead we have percentages. Okay, what that means is it is giving us the market cap of BTC in relation to the entire crypto market. So we can see BTC had 66, funny enough actually when we think about the CC, isn't it? So CC is the 618 Fibonacci to the 66, okay? At the 66% market cap of BTC, we retraced. Is that a coincidence? I don't know. Then we are currently sitting at 6.1, almost 8. Okay, so it is just the CC, to be honest with you, right? Yeah, we're sitting at 61.2% market cap of BTC. That means if this is dropping, altcoins are moving up. Okay, so if this chart is dropping, that means prices of altcoins with that the market cap of altcoins is increasing. So that is super interesting to know. However, we always have to zoom out, look at this chart and see, is that actually telling us something about what might be happening in the future? So we can see here since September, or let's say this, yeah, this is September 2022, we have a clean uptrend, high, higher, low, higher, high, higher, low, so on and so forth. We had some dips in the meantime. The last significant one happened in November 24. In the end, however, this simply ended in a higher low before price was making another higher high. So if we zoom out, compare the previous history to what's currently happening, we can see this could still end in a higher low formation. What that means to me is that I'm not getting super bearish on BTC, nor am I getting super bullish on altcoins just because we've seen this Bitcoin dominance drop. This could easily be the higher low before we make a higher high. So I cannot really use this as additional confluence for my trading unless I see the market structure clearly breaking. A confirmed market structure change, to remind you again, is characterized by a low, lower high, another lower low. So I always need 3 pivots, lower low, lower high, and the lower low needs to be broken. That has yet to happen. So I can't talk about a altcoin season unless that is happening. So this is already covering quite a few things when it comes to making a decision on which one to trade, what's likely to happen in the future. Are we having an alt season? Are we having Bitcoin dominance dropping and whatever? At the end of the day, that doesn't pay your bills. Opportunities do. One more thing I always have to check is the volume. So let's have a look at the volume comparing Ethereum to BTC. Interestingly enough, we can see that Ethereum in the last 24 hours at least has flipped BTC in terms of trading volume. So we can see in the last 24 hours, Ethereum, this is the USDT pair, was trading $9 billion. This is quite a lot. BTC was trading at around $7 billion. So volume, in terms of volume, right? So that means Ethereum has flipped BTC, which is super interesting to see. I will monitor this and keep an eye. But at the end of the day, what we can summarize here when it comes to the differences between Ethereum and BTC, both of these have enough volume to look for day trades, scalp trades, swing trades. Now it is more important to look at the opportunities that we have, because when it comes to lower cap altcoins, I need to check the volume to see if there's massive slippage. But with this type of volume that we have on Ethereum and BTC, we don't have to be too worried about any slippage on Ethereum or BTC. But now that we're already looking at this chart, let me actually show you one more thing. Why? BTC is offering more trades on the lower time frames. And this is simply looking at one single factor of technical analysis. We can see BTC on the right has just done another swing failure pattern of this high at 119,000. Ethereum at the same time SFP'd nothing. Okay, so Ethereum, not possible to trade this. On BTC, we had a trade. This goes to show on this, I would say this is just 24 hours of price action. We had 3 liquidity grabs on BTC while there was none on Ethereum. Okay, this just proves the point of BTC offering a few more trades. Another thing that we have to take into consideration when it comes to volume and the macro factors of trading BTC and Ethereum is macroeconomic news. What we tend to see is that BTC, since it's also institutionally adopted, which some people hate, I would say it is a positive, because what we can do on BTC is also trade the BTC future pair. This allows us to be exposed to day or scalp trades with lesser margin and also with lesser fees, because trading on the futures pair is super cheap. This offers the opportunity for institutional trading. That means we can heavily rely on volume. But one thing we have to keep in mind here is that in terms of economic releases, geopolitical news, BTC tends to react a little bit more to these news in relation to Ethereum. So whenever we are trading BTC, we have to keep a news feed on or somewhere on our charts and also be aware of big macroeconomic data releases. This is super important when it comes to the difference between trading these two. An example for this is obviously the CPI data release, the FOMC data release, where we can see Bitcoin reacting heavily while other altcoins such as Ethereum, Solana, Doge, XRP, you name it, they tend to react a little bit less. So for day and scalp trading BTC, we have to prepare ourselves pretty similar to how we prepare ourselves to trading futures. We need to be aware of these events. So now that we covered all of these things that make an impact on the capital allocation or the asset allocation for me on how much I'm trading Ethereum, how much I'm trading BTC, I'm going to give you my breakdown of how it looks like exactly. When it comes to swing trading, I tend to keep 50-50. So 50% of my capital goes to swing trading Ethereum, 50%, if we just look at these two, 50% of that goes to BTC. There is no difference. The only thing that I already covered is that on BTC, it is easier to compound a trade. So that means over time, I can increase my swing trade capital or the margin that I'm using on BTC, while on Ethereum, typically I'm just staying in that initial swing trade. When it comes to day trades, there is an 80 to 20% allocation. That means 80% of my day trades are BTC. Only 20% of my day trades are on Ethereum, and I just showed you why that is. We can see this. BTC is still reacting beautifully to this SFP, while Ethereum is, like it tends to do, just consolidating up here. And when it comes to scalp trading, this is the interesting part. There I am 100% in on BTC and 0% in on Ethereum. I'm not taking any scalp trades if you look at my history from 2025 on Ethereum, and instead I'm only scalp trading BTC. That doesn't mean I prefer BTC or like BTC more. I'm just caring about opportunities, and that's it. But obviously, as a trader, I stay flexible. So whenever Ethereum BTC breaks out, like we've now seen, and I realize that Ethereum is now offering more day or scalp trading opportunities on the lower time frames, I'm gonna adapt, and I am then going to trade Ethereum more. That has yet to happen though. Once that is happening, I will let you know. And till then, I'm just trading my proven system. I will also have a look at the OI. That means open interest. So what is happening on the open interest of Ethereum? Is there a significant change? Is there something I can read with the order flow that is giving me another edge? So if you want me to cover Ethereum more in depth or even other altcoins, compare it to the BTC chart, let me know in the comments down below and I can work on a video on basically comparing everything against the BTC chart. Whatever you want, let me know in the comments down below. Also make sure to hit the follow button, hit the like button if you enjoyed this video. If it was helpful for you, let me know in the comments down below, and see you in the next video.